Welcome back again. Now it's time for Penneo, represented by the CEO Christian Stendevad and CFO Kasper Christiansen. I'm sure you'll tell us more about the market drivers and outlook for Penneo, so I will, with that, hand over the call to you.
Thank you very much, and thanks for all for participating. So I am Christian, the CEO, and here with me I have Kasper. And first, just very shortly, who is Penneo? So founded in 2014 by a group of entrepreneurs, and that originally had this idea of killing the pen. And now, many years later, we are now a business-to-business software as a service company with an ARR around 71 million end of 2022, 111 employees end of the year last year, and more than 2,500 customers in Denmark, Norway, Sweden, and Belgium. And our key focus is on digital signing, document workflow, and know your customer. That is part of the AML, anti-money laundering regulation. And we have a solid footprint within audit and accounting, and also among the big 10 auditing companies. And we have the aim of becoming the preferred platform for auditors and accounting across Europe within our domain. And if we just go into our offerings and the key customer pains that we solve, our two offerings with the Penneo Sign, as we call it, and Penneo KYC, the customer pain that we are solving is time-consuming processes. Within both Sign and KYC, today, many customers are spending a lot on manual processes around it and workflows, handling the documents or handling the customer due diligence as part of the customer know your customer processes, cumbersome and we're full of risk. And we automate that and do that much more efficient. Then it's also around both areas, a lot of compliance and security matters. KYC, as an example, are based on regulation as part of the anti-money laundering regulation that you have to live up to. You have to be compliant, and we fulfill that you can secure that you are compliant against that. And then last but not least is the whole customer experience. In order to do businesses, it has to be very easy for our customers, end customers. So when they are reaching out either with documents to be signed or as part of getting them onboarded as part of the KYC, that is an excellent and easy process. It's very important for our businesses. And if we go now into the growth drivers and of our market, so what we have seen here in 2022 was that the whole macroeconomic climate was weaker than what we experienced earlier. But based on some of these estimates that we have seen in reports, it's still expected that both the market for digital signature and also the KYC is growing. And these are global numbers that are shown here, but it represents also the EU market. That's also what we see out there. So the digitalization in general across Europe, that continue despite the fact that there might be, a weaker macroeconomic climate that continues. And the regulatory demands is also increasing, especially within the anti-money laundering regulated industries. Their needs is also increasing as the regulation is increasing. And there's also some structural drivers that help us. In general, there is a high on the agenda, the whole digitalization throughout Europe that help also us. So despite the fact we really see on growth potential that we tap into. And for that, we have a twofold strategy. And we are in our existing markets where we have already are strong, and we continue to grow in these markets. And we also have strategically the strategy of a geographic expansion into new market. And we are investing in 3 different investment streams. We have our KYC product that is not as spread out as our Sign product. 2/3 of our customers also have a need both for our Sign and our KYC. And we have a key focus on upselling our KYC products to first all our auditors, but also all our other customers that has a need for that. Also, in general, we would like to, as a strategy, to penetrate what we call the AMA government industries. So like the finance industry or property admin or others that are both regulated by anti-money laundering. So there's a need for KYC, but what also characterize these industries is there's a high need also for our signature solution, and simply penetrate even more these, and then in general also, you can say, fuel our expansion through audit and accounting vertical to become the preferred solution for auditors in Europe. So that's the way we go forward. So the geographical expansion is something that is high on our agenda. And the whole market approach when we go to market, and that has been from the very beginning of Penneo, is this tier model. We have our tier one, as we call it, our primary goal, that's the auditing accountant. So we start, when we start in a market, and also how we did it originally here in Denmark, and also going into Norway and Sweden, and now also Belgium and other markets, is the auditing accountant. We start with them. Strong niche focus, and we have more than 800 of those. And from there, we spread to tier 2 and tier 3. Tier 2 is other industries with this need for both our signing solution but also a KYC. We have more than 800 within that. That can be auditors, finance, engineering, insurance, property admin. And then the tier 3 is the network effect. So there are other industries that's for the signature solution. So often when audit and accounting, when they're sending out, for example, annual report, and has here in Denmark last year, 81% of all annual reports signed in Denmark was signed by Penneo. Who signs it is exec management team and board members of other companies. And when they sign it, what we have experienced over the years is that network effect. When they see the value of it, then they reach out to us and would like also to buy it for their own. So we have more than 900 of those. So that's the network effect. And that's how we have grown over the time, the customers back from 2014 to now with our more than 2,500 customers. And that's also the way we go to market. For example, in Belgium right now, we have a high focus on the tier 1, and we have been very successful here, especially here lately in 2022. We can see that how that expanded. We can come back to some of the numbers of that, and that's there we started with the tier 1, and then we will soon also see the tier 2, and later also the network effect to tier 3. So that's our overall marketing, and that will continue also in the market and in 2023. So now we can jump over to yours, Kasper.
Thank you, Christian. I have chosen 4 slides here showing how we think and measure our performance. We are a SaaS company. And the next 3 slides after that is around how our historical performance. So the first slide here, ARR growth. We have, as Christian said, more than 2,500 customers. And every day we think, how can we actually gain and develop this portfolio of customers and the total value they bring to the table. We have 2 sides of the ARR growth. One of them is how can we ensure that our customers are buying more from us every month and every year, simply by having this policy or the way of thinking. How can we create more value for our customers, and when we create value, how can we actually ensure that we also have a cut of that value, meaning how can we build our price model to increase the ARR per customer. On the other hand, we also invest a lot into getting a new customers on board, meaning new ARR. And all that scaling a company comes with a cost. And in Penneo, we have this opposite side of growth is how much does it cost. The free negative cash flow we see in Penneo today is a result of us having a lot more people hired than we actually could afford with the current ARR. So the way we measure our performance is like looking how much can we grow the ARR and what does it cost. And I will come back to the cost later on. On this slide, we see two sides here. The first one is the historical development of our portfolio. And in the bottom here, you see customers coming in 14, the total ARR they have each year, how much is it actually they are representing in terms of annual recurring revenue. And the idea is to show when we invest to get a group of customers in 1 year, how much value do they bring in the future. So what you could see is that back in 14, where we have the founder André and a couple of sales reps running around and doing a lot of sales, that was kind of a small investment, but that investment has resulted in a strong AR and also an uplift year since then. So it shows that it was a good idea to have this cost back in 14, and so on with the year coming after 14. On the other side of the slide, you see how does it look if you just look 12 months back. So dividing the portfolio up to existing customers, how have they developed in the past year, and how do we perform when it comes to new customers. And we also show, since we in 2020 acquired a company called CLA, they had a know your customer tool they have built. We acquired that tool from them, and that means that we have a second revenue stream. So we not only digital signing, as Christian said, we now also have this know your customers. So the idea is that when you have plus 800 auditors and plus 800 other AML government companies, it makes sense to have a second revenue stream for the same customer. So when we do the annual follow-up on the customer relationship, we also talk about, could it be an idea for you to have this new product? So that's the way we are thinking of how can we develop our business, not only getting new customers in, but also how can we maintain a strong net retention rate. And back in 1920, we set out our European expansion strategy. And I'm pretty pleased to see that we now see a good traction, as you also said, especially in Belgium. Here last year, in the second half year of 2022, we saw a pretty good traction in Belgium. So it's of course important for us to follow how is it actually going on the local markets. And if you dive into the individual countries, it's pretty important to have in mind that we have this tiering model. So you can be pretty strong in tier 1 or tier 2 or tier 3 in the different markets. So that's a part of how we actually think when we are thinking internally in Penneo. And then I have chosen to include this slide just to present how do we actually think, how much does it cost to get a new customers in, how many customers do we get in, and what is the start value for customers. And on top of that, we also following pretty close how much does it can we actually uplift our customers, meaning the net AR retention rate, how strong is it, how able are we to maintain and build on the customer relationships. So that's a part of how we think as a software as a service company. So now to some slides which take us on the historical journey from the beginning. We have some years before 14 where the founders playing around with this new EID we got in Denmark. We all learned to have this small key cards with us, and they think, how can we create a great solution around that and a secure solution? So in the beginning of 2014, they was ready to actually found the company, and back then they found a cash position to start out this journey. And then we have some years where we was defined as a startup up until 18, at the end of 18. And then we set out this journey. Okay, now we actually think we have a product market fit. We could see we have pretty strong traction when it comes to auditors, especially in Denmark, also starting out in Norway and Sweden. How can we take advantage of this, let's call it a window of opportunity, and actually gain our market shares before the competitors would be too strong? So that's the reason why we in 19 decided to do the planning for the IPO in 2020. We raised some bridge funding, got a pretty strong investors on board on the cap table, and in 2020 we raised 50 million in relation with the IPO. And then we have this like the mindset, okay, this is an investment plan. We have a period where we actually need to deploy all the cash we have, all the capital we have raised, and now we need to show that we actually can handle the cash. We can do the right investment. We can invest in development in our product and development of marketing and the sales and so on. It's both a game of strengthen and professionalizations of the organization, and also scaling where it actually matter, meaning more sales reps, more investing into lead spend on marketing, and also investing into product development. And in 2021, we was ready with the numbers. I could see there's pretty good traction. While we also announced to the market that we was ready to plan for a new investment round. And in 2022, we realized this plan, achieved this capital raise, and now we are on this path where we again see that the cash in hand or cash position will go down to like in 2024, sorry. And after that, we will again do the assessment and the evaluation. Have we actually deployed the money well? Do we still have strong SaaS metrics and so on? And if that's the case, we could decide to go for a new capital round. But up until we have taken such a decision, we are driving or leading the company as of the policy that we will never run out of cash, meaning that we will never hire more employees than we actually can afford within our current plans. And the last slide for me before I hand over to Christian. This is the result of the first investment round and the start of the new investment round. And we, as I start out saying, we measure our performance and how much do we grow our AR and what does it actually cost in terms of negative free cash flow. And you can see in the beginning of the first investment round, it cost around 1.7 crown to gain or increase the AR by 1 Danish crown. And in the end of the first investment period, that price was lowering to 1.3. And now when we set up this scaling phase again, the price per new AR crown increase. And that's because of a lot of our investment is midterm. It's not only hiring a lot of people and day one they will bring value to the table. Of course, it will take some time before we can see the value of hiring that many new people. That's all for me.
And then having an outlook for 2023 and how we see the market go, we have come up with a guidance that represent our view on it. Our guidance on ARR is corresponding to a growth of 23 to 34. So going from 71 to a range between 87 and 95 end of 2023. And that guidance is based on the key, some 4 key assumptions on how we look at the market. First assumption is that conservative buying behavior that we saw in late 2022, we expect that continue. So that is built into these numbers. So that means that some of the deal size that we saw was smaller than and with a smaller commitment, and then afterward, then there can be, say, a upsell opportunity, and also some longer sales size. That's what we experienced. So that we expect to continue. But it also represents some unchanged strategic priorities, because despite, as you also went through earlier in this presentation, despite some uncertainty in the market conditions, we remained confident in our current growth strategy. So we will continue to invest in scaling of our organization, just like Kasper just went through, and that investment, you say, in rolling out as our power strategy with Penneo Sign and Penneo KYC, that will continue. And it's also built into these numbers that we will invest in enter on one new geographical market here in Europe, in addition to Scandinavia and Belgium, where we are right now. Even though that from a revenue point of view, it will only be a very small share now, but that's the investment. We have also built into this that with all the investment that we did last year in our sales organization in 2022, that we can increase our demand generation capabilities. because we see out there that the market is there. It might be a little bit more difficult, but with the right capabilities and the right way of reaching out, yes, the customers are there. And then last but not least, we have experienced over historically a low churn, and we expect maybe a little bit higher, but still below our benchmark of 5%. We also expect that the continuous engagement in general with our solution among our customers, so they continue to use our solution in general on the same level, and moreover also this upsell of KYC. We have also introduced a price increase based on inflation rate, so that can also have a positive impact on the ARR, and that is also built into the guidance. So that's our outlook for it. And seen from the EBITDA, where we are guiding -10 to -15, yet as a result of the investments that we did, that Kasper went through on his earlier slides. So that is the end of our presentation for now, and then we are open for questions.
Perfect. Let's start with a few questions from the audience. First of all, is your overall client base in less cyclical markets, or what is your impression?
Is in less cyclical market?
Yeah.
I don't know if I fully understand that question.
So your client base auditors, are these customers cyclical, or in general, are they fluctuating with the economic business model or business environment?
That's a good only slight, because there is a need for auditors in general, and also for banks and for law firms in general. But what we experience is this more cautious buying behavior. So they might know to be, let's lower the initial commitment, but overall, in general, it is not as the influence is not as big on the market that we are in.
Okay. And the second question is about the KYC solution. Is that a need to have product for your AML regulated customers?
Yes. In that sense that it's by regulation and or by law, they need to live up to have some certain process in place. Do customer due diligence, make a risk analysis of their customers, document it, have a follow-up on it. These can be done manually, but it's very hard. So in that sense, there is a clear need for having a solution that automated those manual processes, and so you are able to document afterwards. So we expect that all those that are regulated by it, at least if after a certain size, have a need for our KYC solution.
Yeah. And sorry, Kasper, did you have something?
Maybe just elaborate a bit. I think as an investor, you need to understand that we have two products. One of them is driven by the efficiency, that's the sign product. The other is driven by regulation. So I think you should do your own math of how is the impact by this volatile markets. I think it's like, okay, one of them is like they can maybe save money, but then they will also cost a lot of manual work tasks to do if they want to save the money. And the other one is like, if you want to be thin and not, be compliant, then of course you can choose not to have a product like our So it's pretty much those two main value drivers.
Yeah. And maybe just to follow up on this one, Kasper, because you said that the KYC product was driven by the regulatory requirements. Do you see any changes here or more regulatory laws coming in over the coming years or month?
I'm pretty sure that the authorities wouldn't let any auditors get around without being compliant. So I think the kind of pressure through this segment is pretty high, and it will remain high, even that if we have financial terms which is more like, okay, it could be a nice case to lower the boundaries. I don't think they will take that decision, even if it's financial turmoils.
So we have seen the opposite. Regulators strengthen the requirements and the need for documentation that you are actually following the regulation and live up.
And maybe we should conclude with just a final question, a more general question about the market and competitive landscape. I know you have the sign and the KYC, but have you seen any kind of consolidation across your markets currently or recently in the current situation?
Not within our area. It might be in other domains, but in our area, we have not seen any significant difference compared to earlier.
Okay. Perfect. I think the time is running out, so let's stop with this one. And I think we went through all the questions. So I would like to thank you very much, both of you, Christian and Kasper, for the presentation today.
Thank you very much to all of you.
Thank you. And I will also conclude the SaaS Deep Dive event here for today, where we got insights into 3 different SaaS companies and the markets and outlook for 2023. As always, our events are recorded and will be shared across our platforms here shortly after. So, but of course, if you have any questions, please feel free to reach out to me or to the companies, and have a nice day.